Hey, good morning, guys. What's going on? Street Trading coming at you with another trade lesson video for everybody looking at an hourly chart of CRM, Salesforce.com, corporate technology sector. So let's get into it. These guys, they took a bit of a bath yesterday. Obviously, the market, pushed up in the beginning of this session, but continued that bloodbath from Tuesday's session and last Friday. Anyway, it's interesting, these guys obviously printed what appeared to be a solid Q4, right? Forecast. And on the report, and interesting because they raised guidance, they beat EPS, beat on revs, and then literally fell off a cliff. So, the way the street goes through information, obviously the earnings call did not help. There was obviously some pretty significant negative reactions to the earnings call. So it's just a perfect example as you really don't know how the overall market is going to react to a report, even if it's, what appears to be at first glance positive across the board. Doesn't necessarily mean a stock is going to push higher after the report, after the release. Traditionally, it should have been a gap up, but bled out and ended up speeding up quite quickly after the last ditch effort pushed to the upside to scoop up what they needed. So we ended up obviously we took this on our we had this on our trade ideas going into pre-market yesterday. We had a very crystal clean plan, or if this then that, and we ended up getting involved earlier and took a small profit, got back in, took a small stop hit, and then got back in again, and then it obviously worked out. So again, we talk about this all the time. More times than not, you probably won't be wrong with an asterisk, if you obviously plan your trade properly and you obviously are sticking to your process. You're probably just going to be early. So a couple of things you do. Obviously, you take the small L, sit back and wait, or ride out the storm. Listen, there's no right or wrong way. It's whatever works for you. That's it. We like to take a small L and then get back in. That's the way we do it. Right or wrong, doesn't matter. We'll give a shit what anybody else feels. That's what works for us, and we do it that way. So that's how we ended up trading this thing to the downside. We had a pretty significant, ambitious target, and it tapped it into the close. So it was a very, very good trade for us overall. Again, we took a small stop in the on our second attempt, and but it didn't matter. It proved to us that we were correct after everything to settle down. And there's a lot of times you're going to see that, obviously, especially on significant moves to the downside, you're going to have a second or even third attempt at a better position or better risk to reward for that matter. And, the boys do that. The boys play with those emotions. Obviously, institutions buy below VWAP and sell above VWAP. All right, think about that. Don't forget that. Anyway, let's get into how we traded, where we got in, how we scaled in, how we stopped out, all the good stuff, and our targets. And it was just it was phenomenal trade. Anyway, let's get into it, guys.